All right, so we have this report out from Capital One over the last couple of weeks that their loan originations are down and their delinquencies are way up. And what this is telling us about the market and the landscape for lending just in general is that these lenders know from seeing these delinquencies come in that that the space is getting worse and people aren't paying their bills, and they know that they're going to enter this time period where there's going to be more defaults, and because of that they're actually pulling back on their lending, and that's why we see these originations down. I think we're going to see that from a lot of other banks that through their earnings, through reports talking about just the general economy, and these banks have to keep their shareholders up to date on really what's going on, so they can forecast out, so they can predict what's going on in the space, so their shareholders aren't caught off guard when they see these delinquency spikes whenever the reports come out. But we're seeing this really across the board, even at the used car dealer space is what I'm in right now, and I go and see these cars go through auction, and there's been a few different auctions that I've been to and been able to see that the even the higher end lending institutions that we're seeing, like Capital One, Wells Fargo, a lot of these One Main, a lot of these institutions that will lend to not necessarily subprime of the subprime, like I have seen, like the buy here pay here, but the step up from that. We're seeing a lot more of these cars show up at these auctions, and there's only really one reason why you're going to see cars from Bank of America, Capital One, Wells Fargo show up at these auctions, and that's because they're getting repoed. And we know that right now that not only auto loan delinquencies are at 10-year highs, but credit card delinquencies are at 10-year highs. And I think you're not going to have really one without the other, because as the economy gets a little tougher to navigate, as inflation stays as high as it is, and because we just came out of this period where car prices were just ridiculously high, we have all-time high car payments right now. It's much tougher for the consumer, especially on the car buying side, to be able to get into these cars, and then once they get into these cars, to be able to continue the payments up. And a lot of times you get these consumers that get into these vehicles and they're shopping their monthly payments, and not necessarily what the price of the car is, but when they're going through and they're shopping these monthly payments, they're probably already stretched to begin with, and they're trying to make this $800 car payment work when they're going and buying this brand new car, and they're like, oh, I can make this happen because I can make it happen this month. But a lot of consumers, what they don't do is they don't factor in the risk of problems that might come up later on. Kids get sick. I mean, people can lose their jobs, and a lot of people don't build in this cushion. And what we know about Americans just in general is that most Americans don't have $500 set aside in their savings for a rainy day, for an emergency. And what what we know is that these emergencies, they're not random. You're going to have some kind of problem that comes up. You can prepare for a disaster or whatever, but what these Americans are not generally prepared for this kind of disaster, and they don't have $500 to a name to be able to cover any kind of these unforeseen expenses. And if you add that into the inflation being as high as it is, then when problems happen, then they have to choose whether they're going to eat. They have to choose whether they're going to pay their rent, their house payment, or are they going to pay for their auto loan. And really, their auto loan, their credit cards, those are going to be the first things that actually fall through the cracks, and that's why you're seeing all these delinquencies. That's why you're seeing all these credit card delinquencies pop up right now, because times are just getting tougher. And as these banks tighten, the auto space is going to get much harder, and we're already seeing that now. So we went through this time period where banks were lending to everyone, anyone and everyone, and they were lending way over the value of what these cars were even worth. And now we're having banks like Capital One come out and say, no, you know what, we can't do that anymore. And what it's going to end up doing to the car market is making it much worse, especially on the new car side. And we're already seeing days of inventory stacking up at these new car dealers. But the thing that's really, really bad for these new car dealers is that's taking a lot of the buyers out of the system, because even you have these buyers that they don't care if they're spending these crazy amount of money on these vehicles. They're shopping the monthly payments. They go in and try to sign up for this $800 monthly payment, and because the banks have gotten tighter, they're getting denied. I've talked to a lot of dealers, a lot of franchise managers on the new car side and on the higher end used car side, that they're saying that okay, they're actually walk-in rates where they can actually get approved for these vehicles that they're trying to sell is going down and down and down and down, and they're concerned about it because banks that would loan on these vehicles that they were trying to sell, no longer, they're not doing it anymore, and it's having to it's the prices are still staying high right now, but what it's causing these customers to do is that they're having to come up with a larger down payment. And these customers, they don't have money to begin with, and a lot of these consumers in the last 3 years, they were able to get approved for these loans and with minimal down payments. And it's not the case anymore, because there's this big gap between what the banks are perceiving these vehicles to be worth versus what the dealers are actually selling them for. And there's a gap between there, and that customer has to bridge that gap. And the customers, they can't do it. They can't come up with these monthly payments. So sales are falling through the cracks, and well, sales are actually they're going down because these customers are just not able to get approved for these loans. And there's another aspect to these, like interest rates staying high for these dealers, and that's the dealer floor plan costs. And a lot of banks are getting out and pulling out of the floor plan space because they know that the auto industry is in a bad place right now, and they also know that dealers are having a harder time selling cars. Inventory stacking up, and as inventory stacks up, that means that these cars are sitting on dealer lots for a lot longer. That means added cost for a lot of these dealers. And you have these dealers really being hit in three ways. So you have interest rates that are higher, so their floor plan costs, the amount that the basically the credit line that they use to purchase their vehicles, the rates that they're having to pay on that are much, much higher. You're having banks tighten up and actually being pulled out of the floor plan space. So that means that the floor plan companies that are left in the floor plan space, they can charge more. They can charge more fees. They can charge higher interest rates, because the landscape of what these dealers can actually go out and get is shrinking. And then you have the added aspect of, okay, well, they're not selling these cars because consumers are not getting approved for these loans. So you have these dealers that are getting hit from all three sides right now. And what that means is that cars are going to sit on lots for longer. And as they sit on lots for longer, dealers have to pay more money to satisfy their floor plans. And as they're doing that, it's costing them more than it was 2 years ago, because interest rates are higher now than it was 2 years ago. And I think that you're going to see this just continue to be a problem. And what I worry about, especially for a lot of small used car dealers, is that ones that are over leveraged, they're using these floor plans as a weapon. Well, it becomes a double-edged sword when you no longer are able to sell cars, and as they sit on these dealerships lots for longer, it's just more money, more money, more money. And this is money that these dealerships didn't have to begin with. So they end up having to what we say is to dump a lot of cars. And what these lending institutions will do is they'll help these dealers sell their cars. And one way they can do it is going and actually repoing these cars from these dealers. And when they do that, they send them to auction. And when that car is brought to an auction by an independent dealer, by a floor plan company, it's not going to bring anywhere close to the amount of money that that dealer originally paid for that vehicle. So there's going to be a significant loss in from what that dealer can actually get for that vehicle. And then at that point, they are responsible for the difference on that vehicle. And just like when a consumer gets a car repossessed and it's sent to auction, the bank dumps it, then that customer is then on the hook for the negative equity amount. With the dealerships, is the same way. And where this affects the dealership a little bit more is that is their I mean, that's the way that they're able to stay in business. So if a dealer can't come up with a difference on these cars that they're not selling when they get dumped at auction, then their floor plans can be decreased. And this is what companies like Capital One, these banks, are seeing happen across the market, is that they are protecting themselves from these losses that are going to happen. They're pulling themselves out of the market, out of the auto space, because it's not good. And with them showing that, that's going to hurt the market. It's going to hurt the psychology of the market. It's going to pull extra lending out of the market, and it's going to be really bad for dealers. It's going to be bad for consumers that want to buy cars. They're no longer going to be able to, and it's something that we're going to have to deal with here in the car market going forward. And I really think it's going to over the long run pull prices down, because if we don't have lending for these vehicles, consumers can't buy the cars. If consumers can't buy the cars, then dealers aren't selling the cars. And if dealers aren't selling the cars, they have to lower the prices to find that magical price point to get consumers in cars. And we've got a couple questions here. So what needs to happen to car prices? What needs to happen so car prices are normal again, or will prices never go back to what it was pre 2019? And I really think it's sad to say, but I really think that car prices are probably never going to go back to the levels that we saw back in 2019. And the reason for this is because we lost, at least on the used car side, we lost so many vehicles from new cars not being produced. And then because these new cars weren't being produced, these new car dealers weren't selling a lot of vehicles. So a lot of these trade-ins that were supposed to happen, that were supposed to come in for these new cars, they didn't happen. There's a lot of auctions that I go to that I remember going back to them pre 2019, and they would run. There's one close to us that would run like almost 900 cars a week. They're lucky now to have about 400 cars. So that's less than half that we're getting in the trade-in market right now. And that's how used car dealers, that's how we survive. We survive off trade-ins. Now, I know a lot of people say, well, we have this spike in delinquencies. We have this spike in repos. Isn't that going to fill the void from where these trade-ins are lacking? And yeah, even if we have this massive explosion in repos, more than what we're seeing right now, there's still been so many trade-ins that have been lost to the system that it can't fill the void. And on top of that, the repos aren't going to be the answer, because a lot of times these repossessed cars are not what dealers want to buy. When we go look at dealer lots, and I mean, when we go but look at dealer auctions, you can see it in some of the videos that I post. And by the way, if you haven't, go ahead and subscribe to this channel, because we'll be doing some auction videos here in the near future, so you know when they're coming out, and I can show you kind of what dealers are buying, what prices they're paying. I can show you what these repos look like when they're coming through the lane. There's parts falling off of them. They're nasty. So when someone knows that they're not going to be paying for their car, they know, most people, that when they're looking at their bills, they know that they're not going to be able to make their car payments. A lot of people know that their cars are going to get repoed before they're repoed. So when that happens, why would they spend any money on it to fix it? Why would they spend any money on it to maintain this car if they know that they're going to be losing this car? So these cars are often not maintained. They're nasty. They have things falling off of them, and they're the worst of the worst of the worst vehicles that are in the car market. And it's almost to where, like, car dealers like myself, I buy cars that are $5,000 and under, and that's the kind of the market that we live in. Even us, we will still buy some repos and they're in good shape, but they're few and far between. So the repos, they're not going to be the answer to getting the prices back down to where they were. And because we've lost so many cars to the lack of production and the lack of trade-ins, and now we're losing cars because we have production back up in the new car side. We have dealer lots that are getting filled. I mean, we could talk for a whole video about Jeep lots being overflowing and days of inventory going up and up and up and up there, but they're still not selling vehicles. So if they're not selling the vehicles, they can't get these trade-ins, and the trade-ins can't make it to us, and then they won't be filtered into the used car system. So used car prices have to stay stubbornly high unless demand just goes so far down that the supply doesn't matter. So no, unfortunately, I think it's going to be a very long time if we get back to 2019 levels, but I don't think we're going to get back to 2019's levels. That's my opinion. I hope I'm wrong about it. I really hope I'm wrong because I would love to see those cars, and I would love to see cars where I can buy and sell them for $1,500. I used to be able to sell cars for $1,500 on my lot. That's unheard of now. Like about the cheapest thing that we're going to have on our car lot right now is about $2,500, and I hate it. I love to be able to sell cars for $1,500 to people because almost anyone could scrape together $1,500 and they could have a car that they could get to work, an AB car that was fine for them. But unfortunately, that doesn't exist anymore. And I hope I'm wrong, and I hope we get back to that time period where I can sell vehicles like that. But I just don't think it's going to happen. All right, so we have another question. No sell rates. Are dealers selling at auctions or holding out for more money? Right now, we're in a weird time because we have tax time that's I'm anticipating to hit us this week. So what other dealers know is exactly what I know, and we know that tax refunds are coming. I know I've seen it all in the comments that tax checks are going to be way less than they have been previous years, and that might be so, but it's almost not going to matter because there's psychology in the car market right now that okay, tax time's coming and dealers are holding out for higher prices. And that also means these franchise dealers, because they know that used car dealers like myself, we go crazy at tax time because we sell everything we got and then we have to rush to auction to reload again and we'll pay higher prices. So these franchise dealers, because they know that, they're going to hold off right now. And that causes no sell rates to go up at these auctions, and that means that that it's a little bit tougher to make a deal happen in lane right now. And we're seeing that again. If you watch some of the auction videos that we do on this channel and our main channel, you're seeing that no sales are a big problem. And what I do worry about, just talking about tax time a little bit, and to get on board with some of you that think that possibly tax season is not going to be as strong as it has been prior to, even if we throw a little bit of tax season into the mix, because inventory is low on the used car side, it's still going to smash prices up. That's just going to happen because there's not enough inventory in it. And if we get any fluctuation in demand, which demand will spike for just a little bit of time, even if there's just a little bit of tax money out there, dealers are still going to rush to auction. Prices are still going to go up. But going back to what the no sell problem is, that as it dissipates the tax money, and as dealers start losing their appetite, you'll see a little bit of a crash in the car market because there's this expectation of it doing so well, and then it just kind of will fall off. But what I'm concerned about as far as tax season, if what I'm seeing in the comments is correct, what I'm concerned for other dealers is that they're going to prepare for tax season just like we are, and they're going to anticipate selling a bunch of cars. We are also anticipating selling a bunch of cars. We get loaded up for it, and then the tax money never comes. And if that happens, that's going to be very, very, very bad for the car market, because you're going to have dealers right now that are overexposed because they're preparing for tax season. You have franchise dealers that are paying more for trade-ins right now because that they can take them to auction and get this high amount of money. So they're holding on to higher prices. They're no selling cars. And the tax money, if it never comes, then these dealers that are overexposed, they're going to be stuck with these cars that they paid way too much for. And then they're not going to be able to sell them because there's not going to be any money in the system. That's a big setup for disaster for a lot of these dealers, especially if they're on these floor plans. And this is the risk that I'm talking about, linking it all the way back to Capital One, tightening lending, these other banks that are pulling floor plans and getting out of it. That's a big concern for them. If these dealers that think they can sell these cars because they're paying so much for them, they can't sell these cars. And if that comes to fruition and the tax money doesn't come in, then we're looking at a big disaster for the car market.